From Washington, this is the Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, September 2nd. You're listening to the Macrocast brought to you by Hamilton Place Strategies and Markets Policy Partners. I'm Tony Fratto with HPS. We have Matt McDonald, as we do on every jobs day from HPS as well. John Fagan, Brendan Walsh from Markets Policy Partners are partners in this podcast endeavor. Hey guys, it's Labor Day weekend jobs day. It's like Labor Palooza today. Workers of the world, we got it all for you today. We're going to be looking at all parts of all things jobs. We have the jobs report that just hit a little while earlier this morning. Matt, what were the big takeaways for you coming out of the non-farm payrolls report this morning?
Yeah, big takeaway was labor force participation rate and workers rejoining the labor force. So headline numbers, the headline number was 315,000 jobs created. The unemployment rate actually went up to 3.7%. For those for whom that doesn't make any sense, and I sympathize, is that it's worth describing a little bit of like the way that the Bureau of Labor Statistics does their jobs report is that there are two surveys. One survey goes to employers, one survey goes to households. The two do not necessarily match up. The unemployment rate is derived from the household survey. The headline number, the 315, is derived from the employment survey. On the household survey is that you actually had, and this isn't the headline that people give you, but you actually had 442,000 jobs created, but the number of people entering the labor force in the household survey went up by 786,000. So anytime in the household survey that the growth in the labor force exceeds the growth in jobs, is that results in the unemployment rate going up. And if you have the opposite, then the unemployment rate goes down. So this is a situation where I would argue that the unemployment rate going up is actually good, because you have the kind of positive, growth in the headline jobs number from the employer survey. And it's worth pointing out that the employer survey is generally more stable than the household survey in terms of numbers. You can see much bigger swings in the household survey. But the labor force participation rate, which is a measure of how many people are working or trying to work in the economy, went up by 0.3%. The people joining the labor force of over 750,000 is a big deal. And we are still about a percentage point below the high watermark of the labor force participation rate pre-pandemic. But this is all really good stuff if you're cheering on a soft landing for the Fed. More people entering the labor market will help kind of reduce pressures there, reduce wage pressures, reduce pricing pressures. That is all good stuff, and where we want to see things, where the Fed wants to see things trending. And the fact that you have kind of a headline job creation that's over 300, that's a really robust number. Yeah. So this is all good stuff. Just a couple other details. It's worth pointing out that we had some revisions to prior months. June was revised down a little over 100,000 jobs, which is a little unusual. And then July was revised, I think, down maybe 2,000. So nothing really changed in July, though July was a big number. If you look at longer term trends, we're clearly seeing the number of jobs created go down since the beginning of the year. So there's a little bit of slowing, but it's still pretty robust. And on the labor force participation rate too, it's worth pointing out that 2020 was now a couple of years ago. When the calendar ticks over around the corner, it'll be 3 years since the pandemic. We're probably 2.5 in now. The other underlying dynamic that goes into labor force participation rate is population changes. So Baby boomers are retiring. There's a general aging of the population. So you're going to have, as that cycle works out, as those demographics work out, you're going to have a lower labor force participation rate. So even as that recovers, we may not end up at the same point we were pre-pandemic because, the population changes, life moves on and that sort of thing.
Yeah, I think, those big, a lot of that, there's so much unpacked there on the, from the reports. You're right. I mean, on the one hand, if you were super bullish this summer on job creation, you should probably still be super bullish, right? I mean, I don't know. We should not now be surprised if we see a revision downward on the July numbers in the final report next month, which wouldn't be surprising to see that after what we saw with June. That said, even with June, still pretty solid job growth. And if there was something like Goldilocks that you would have liked to have seen out of this report, it's continued job creation, and as you noted, and an increase in the unemployment rate, and increases in labor force participation rate. Those are all things that should trend in the direction that whether the Fed can stick the landing. When you see numbers like that, or land the plane, I guess we're going to land the plane is what we were saying. And there was a question as to whether it's a narrow runway or a wide runway. You see numbers like this, you think, well, the runway just got a little bit wider for them. They certainly should feel that way.
Yeah, and the markets are reflecting that. Yeah, it really, just as you said, Goldilocks number, and so we've seen after Jackson Hole the determined tone from and grim sort of determination, as we characterize it, from Chair Powell, had really put a lot of traders and investors on edge about the Fed's determination to really tighten the screws on the economy, and this. We'd seen a lot of run up in Treasury yields, particularly, not just the policy sensitive 2-year and front end, but the 10-year was getting dragged up along with it. So we're seeing Treasuries rally pretty strongly today, and that's giving equities a little bit of wind in the sails. The dollar is coming off these multi-year highs that we'd registered. And, you always have to take late summer price action before a long weekend with a few grains of salt at the very least. But yeah, I completely agree. And the markets are aligned with your characterization of this as Goldilocks.
Yeah. And these details really do push the Fed to maybe moderate a little bit and maybe only do 50 at the September meeting rather than 75, because what you saw is there still is plenty of supply of labor. People entered the labor force, but the demand is moderating a little bit. We had the unemployment rate go up, but we also saw wage gains, not quite as strong as we've seen earlier, but still good enough. So the Fed now at this point, if you just use this data point as the basis of it, the risk is really that they over tightened and destroyed job demand and creation rather than whether they're too loose and inflation gets out of control.
It's worth pointing out, relevant to that, it's worth pointing out that it takes two to make a job. I think in a normal economy, normal times, the heuristic that I think people tend to fall back on is that the employer is the actor in the job creation exercise, that somebody wants a job and they decide to hire them. That's not exactly what we're talking about here, is that it takes two to tango, someone to offer a job and someone to want a job. And I think part of the issue that we've had since the beginning of the pandemic is people wanting jobs. And so that's part of the reason that seeing the labor force participation rate click up and having more people entering the job market is super healthy for the balance of that market.
And one of the other factors that we've mentioned before is that the jobs numbers are lagging indicators. They're usually in the caboose kind of lagging. They fall off the table after pretty much everything else has, whether that's a dynamic of just the lengthy HR process, the kind of investment you've made in the people that you want to bring on board, the sort of residual, sort of hoarding of talent kind of idea. It's a long process, bringing talent in, and certainly in this environment, I think it stands to reason that hiring will stay apace, even if there are some challenging situations. Obviously, we're seeing a lot more signals from other economic sectors in the U.S. that are showing slowdowns, and so it's all it's good that we are where we are, but we don't want to get complacent and think that the U.S. economy is in a really solid place based on these really attractive numbers, because labor market data stays attractive well into even recessions.
Yep. Actually, I know you guys talked about it last week, but certainly the signal from Powell last week at Jackson Hole that he made very strongly, and but that was, of course, before he saw this data. I know there's more data to come, and Brendan, you alluded to it. Has it changed your views on 50 versus 75 at this point?
We, for many months, have been of the opinion that this September meeting was when they were going to downshift, and that 50 made sense. And I think all the data that we've seen in the last, 4 weeks or so supports this, especially this data point. This was one of the ones that was hanging out there that we weren't necessarily sure. That the jobs data has been strong, but I think this data point does open up the window for the Fed. When you take in all the other very, very weak data, we had the global PMIs, both services and manufacturing, both here in the United States, but also abroad. And most of those sectors are in contraction. I think that's something that the Fed has to worry about. The other thing that the Fed has to pay attention to is the amazingly strength of the dollar. If they go 75, especially in the emerging markets, the dollar is just way too strong, and a lot of emerging markets currencies are too weak. So you risk creating a EM currency crisis down the road.
Yeah, our view.
Wait, Tony. Wait, Tony.
Yeah,
do you listen to the Macrocast when you are out? I need to calibrate how I approach that when you're out of office.
I frequently do. I can't say that I've listened to everyone while I'm out, but I do try to listen to them. I love the Macrocast.
That did not escape my notice that you were referencing our conversation while you were out.
Well, everyone should listen to the Macrocast.
I agree. I'm just,
I especially like the Macrocast where I get to listen a little bit more than talk too. So because you guys are all pretty smart. On that, it's a great point, Brendan, and I think we're going to get a chance if we do see. Look, we know that they're going to go at least 50. I think that's pretty much consensus.
Yeah, without a doubt.
The emerging market story and the divergence in the spread on the rates between here and Europe also is pretty significant. We've seen dollar parity, and we're at that point of the euphoria in dollar parity where there are all the great stories about how cheap it is for Americans to buy villas in Tuscany again. And,
I was going to send that article to you. I was going to send it to you. I should have known that you had
Google
the
alerts
alert.
on that
one. I bet.
So it's that we're at that point in the story before people realize oh shit, they're actually it actually creates a lot of problems. But right now I think it's benign and probably helps, and it helps the Fed and its mission right now. But you're right, for emerging markets, it's a big issue. We should definitely come back to it. And I think we should come back after. Let's take a break right now. I'm going to come back to something Matt said earlier about that other the other side of the dance. That people have to want jobs, because there's been so much storytelling this summer over how people are working in the workplace and what they're doing, and the quiet quitting and great resignation and all of these terms that have emerged this summer about the workplace. And so let's take a break and come back to them and dive into those on this Labor Day edition of the Macrocast.
HPS is looking for full-time public affairs associates and analysts. We're seeking entry-level associates and analysts to join our dynamic team. Associates have immediate client exposure and opportunities for professional development while working in a fun, fast-paced, and challenging environment. Applications are open now. Recent graduates or applicants with up to 3 years of postgraduate work experience are encouraged to apply. Learn more and stay up to date on our openings at hamiltonplaystrategies.com/careers.
All right, we're back on the Macrocast. Guys, so the term that has been, like if you Google it, there's probably a spike this summer that you'll see on quote unquote quiet quitting. And, and as it was described to me is, people sort of, showing up to work, just doing the bare minimum to be a worker, working to rule, working to whatever the standard is in the workplace. And it reminded me of it's around this time of year that, that I start quiet quitting as a fan of the Pirates is around this time of year, right? It's like I kind of just do the bare minimum, that I am still a fan of the Pirates. I still pay attention, but I'm not giving it my all at come August in most years.
You got an undefeated Pitt team to root for.
I do, yeah. We won the backyard brawl last night, the fake rivalry. But if you're going to have a fake rivalry, you might as well win it.
It was electric.
Yeah. So quiet quitting, the Great Resignation was this idea, people, leaving their jobs. It left the impression with a lot of people that people were leaving jobs and not working. And I think I was probably oversold. They were leaving frequently for other jobs, stepping up in, improving the jobs that, their work situation and has been a very, very competitive jobs market. Some going to gig economies. The thing I think about quite a bit are the kinds of workers who went from from being a waiter to working in, for example, an Amazon warehouse where, waiting is hard. Waiting, you walk 20,000 steps a day and your back hurts and you're working for tips, and warehouses are actually pretty nice places to work. What's your take on this, Matt?
So, well, a couple things. I would say quiet quitting, I find actually super interesting. And I don't, look, there's nothing wrong with doing your job to the degree that people ask you to do your job. The thing that I think is tricky is quiet quitting. I don't think actually is a problem for as much of a problem for the employer as I think the coverage implies. I do think it has consequences for the employee that people are not quite do not have top of mind. It is a little bit like that old school, when people dressed for work, it was like a dress for the job that you want, not the job you have.
Yeah.
Do the work from the perspective of the next level, that type of thing. Look, part of working, the reason that people increase productivity, get raises, get promotions, that sort of stuff has zero to do with years served. It has to do with how much you learn and how much you gain in terms of your efficiency and perspective and stuff. And if you're not kind of putting in the effort to grow, that doesn't necessarily mean you have to work crazy hours, but if you're just kind of mailing it in and doing the minimum, there's no reason why people should progress in terms of role, authority, or pay. So on some level, I think it's fine if people are like, hey, you know what? My job is one aspect of my personality, and I actually want to prioritize these other things. I actually think that's fine, and that's cool. The problem I see is around the corner when people are going to be like, wait, where's my raise? Why aren't I getting promoted and stuff? Because that time will also come, and it's going to be like, wait, I thought you quiet quit. I thought you were just mailing it in. Isn't that the deal? Isn't that how this works? So, I think part of this too is just whether it's a hip term or people mean it. I think that there's a lot of burnout. It's been beyond just work. It's been a stressful number of years. I think that's part of the narrative around the Great Resignation too, is just kind of, if you don't really like the work you're doing and you can find something else in a competitive job market, you should change,
Absolutely.
So,
and yeah, that's the thing, Matt, right? There are a lot of benefits out of that, the labor mobility to me is as important as labor force participation, and probably should have a positive benefit on labor force participation. The mix of employment, people being able to pair their desires and lifestyles with employment opportunities that earn them a return is a great thing. And that makes more efficient markets, and it lets the very best people for those opportunities find those opportunities.
Yep.
This is
Agreed.
great.
Listen, here's a way to think about it, right? There's been a lot of talk about, stakeholder capitalism, and a version of that is just companies thinking about the very long term in terms of how they treat their communities, employees, that sort of stuff, right? So long-termism as a hey, you're not just creating value today, you're creating value over time. I personally think that is generally good counsel. I also think that's good counsel for employees. Quiet quitting is a little bit of the equivalent of hitting your quarterly numbers, to the exclusion of the things that matter and value in the long run. And I worry a little bit that if people really go down that road hard, that they may find that their disinvestment in their personal growth in the workplace, then that has consequences. And then they may be surprised by those consequences if they are not really prioritizing the other things in their life. If they really are, if that is kind of they've done the kind of, internal work to really embrace that, that's great. I think that there will be some subset of people who are kind of in this mindset right now, who are then surprised at the end of the year that they didn't get a promotion because they were mailing it in.
I think you raise a really interesting point. I would love to see some data on what they do with the extra time. Let's say they, the quiet quitters have more time on their hands, but for quiet quitting, they'd be working longer hours and they have more leisure time. What are they doing with that leisure time?
Well,
and
so we
can
do
speculate
have
about it.
Yeah, we have a data set on this. It goes back to 1965. So obviously up until the invention of the internet, the data set is the percentage of full days worked from home. And right before the pandemic, we were up to about 5%. We hit a high of 62% in the pandemic, but recently we've kind of found a happy medium right around 30%. So what it looks like is the office jobs that are able to, people work Monday and Friday from home, and you come into the office on those 3 days. So to put some numbers behind that saves about 200 million hours a week and 6 billion miles of commuting. That's per week.
That is, and it's a really interesting case. And, the productivity, I think we've all heard the stories about productivity going up around work from home. In certain cases, it's not going to work for every job, obviously, but, certainly personally, the savings on the commuting time is meaningful. But, the question about, there are a lot of things that you can do with this extra time. There are plenty of people that are working in a gig economy, and the number of people with, I would love to dig deeper on an idea of if you're quiet quitting, how many of them are spending that time on a gig that they've got, rather than sitting on the couch and playing video games or binging a show.
You hear stories of people not just doing gig economy, people just actually having 2 full-time jobs.
Yeah, that's right.
I think that these things blend together a little bit. And Brendan shared a chart on this, which we will put in the show notes, because it is a pretty stark chart to show what he just described. But there were funny things that went on during during COVID and when work from home went to 60+% of the economy. And to me, there's a lot of things to unpack from the productivity numbers, because it's true that you were not commuting and you were maybe filling that time that count as work time, right? Your commute time counts as your workday time. Now you're filling that time with actual work rather than driving and listening to podcasts, right? So productivity does go up that way, but I think it's kind of where the quiet quitting part comes in, because now you realize, right? We were all working, we were all sort of rolling out of bed and starting to work. And so, productivity is technically, production by man hours worked. So trying to figure out what part was actual work and what part was moving around were different things. So we're all more productive. But I could understand the quiet quitting of saying, you know what, I understood what I was doing during COVID, when we were in a crisis and we didn't know where the economy and our business and our jobs were going. But now I'm going to start work at 8:30, even if I'm working from home. I'm not rolling out of bed and starting work. I'm going to tune into work at 8:30. And if that's quiet quitting, and then I'm going to stop at, 5 or 5:30 or 6 o'clock and not go into 7, 8, 9 o'clock in the evening, it's probably healthier. But I'm not sure how it works out at the end of the day on the productivity numbers.
Let me add one wrinkle to this, because I was coming, I don't know if I was coming hard at the employees, but I was taking the employee perspective, and there is an employer perspective to this too, which is that depending on your company, for HPS, like we very much have a kind of growth model for the team where, we focus a lot on training and learning. As a sidebar, our on-campus recruiting is open right now if you are interested in joining or know a coming college graduate. Check the show notes. I will say that, if you are an employer that has that kind of model where you do rely on growth of the team and progression of the team for your business, as opposed to kind of like maybe a warehouse or whatever, is that I do think the current environment makes it incumbent on the employer to think about ways to engage employees, retain employees, think about how to challenge them in growth, how to support them in growth, that type of thing. I mean, I don't think that's not a given for a lot of my clients, like the labor force. It's interesting. I am personally seeing a bit of schizophrenia across clients where they will be trying to hire and it's hard to hire. And they're also like, maybe parts of it, they're stopping hiring, or, you'll get I've heard stories of like, one person who's demanding huge raises and another person who's doesn't want to be on the chopping block. So it's a weird environment, I think, for both employers and employees. But there is a role, if you do have a growth expectation of your employees, I do think that there's a dimension of how do you engage them to have the work be compelling. I think some of the time for some employees, some people have an internal motor, right, where they just have to kind of like do that next level. And I think part of where the quiet quitting narrative is coming from is people who feel like they are tired of like banging their head against a wall on some of this stuff, and just kind of throwing up their hands. And that's a place where I think you need to have the employers ensure that there's a dynamism to the work, a flexibility to the work that allows people to kind of self-actualize and reach that next level. And
that mindset that you're characterizing, the management mindset, where you have a new and evolving understanding of what your employees need. Obviously, it depends on the kind of business and industry you're in. But we at Markets Policy Partners, we've been thinking that this is part of a larger trend, and that the pendulum has swung during the Reagan sort of 40 years of the Reagan Revolution. Essentially, it was four decades of very significant shift to away from labor, where management got a lot of the power. And the larger trend, and maybe COVID was an accelerant of this, but demographics and so forth are shifting more power back into the hands of labor. And this is a quiet quitting, a great resignation, the unionization of the Starbucks here and there is a sort of a dawning of the realization of workers that, hey, this is the power dynamic is shifting a little bit here. I can exercise a little bit more power within this relationship and dictate some of the terms myself. So it's not going to be uniform, and it's not going to be an event. It's a process. But we think that is a big structural pendulum swing that we're going to see over the coming decades. And we think that's rightly or wrongly, we think it's inflationary. I mean, this is an inflationary dynamic. And I'll give you another
hot take on that. It's not just labor, it's also leadership. Is that the average age of the Fortune 500 CEO is kind of in the 55 to 60 territory, and the kind of peak demographics for like baby boomers and this sort of stuff is also in the 55 to 60 category. The age cohort that comes after that, like kind of 50 to 55, it drops off. This is kind of like Gen X leadership. We're not only getting into a zone where there's competition. I mean, from old school, like shareholder perspective, is that there's not only competition for the quote unquote workers who are working for them, there's also competition for the leadership that's working for them. Yeah. And you also have like, I'm not sure it's as quiet, but you also have CEOs post pandemic who are like, I'm done. It's too much. So it's going to be a really fascinating period ahead for on multiple dimensions.
When I think about, sorry, Tony, go ahead.
No, go ahead, Brendan. I'm sorry. Go ahead, John.
There's also a sense that, I mean, in this, an added complexity here is that when thinking about the labor market and the relationship between labor and management and so forth, is the economy is changing so dramatically. And, the things that were so easy when I was graduating in the mid 90s, everybody wanted to go work on Wall Street, right? That was the big job. If you were like the best physics major, you went to Wall Street. If you were, if you were like the captain of the lacrosse team, you went to Wall Street. It was almost this like Dutch disease of talent and motivation, all going to the place where you were going to have the highest rewards. And obviously that shifted to the tech world. And I don't know, maybe I'm out of touch, but I don't know if there's really kind of any one area that is such a dominant sort of hot industry. It's a very challenging time to go into being a teacher, which is a very common profession. And tech, the secret's out there, just aren't a lot of tech jobs. Going to Wall Street, that sort of ship has sailed. We're in a dynamic economy that is still though trying to find its next era, the next big thing. And I think that when you talk with we have interns at the undergraduate level, and they talk about passion for like clean energy and sustainability. What does that translate to? Where do you find that? It does cut across various industries, but it's those are some of the threads that you hear. But it's not necessarily like a career path. And I think there are lots of people that are in the jobs that they're in and kind of like, looking above the parapet and thinking, what else is out there? Is there something that is meaningful? Is a growth industry? Is there something that I could really make my future in?
John, I think those things are out there. I mean, I still think like, the JOLTS data came out this week as well. I mean, there are, still 2 jobs for every, unemployed person out there. I think they're across sectors. This is still a pretty robust market, and I think it's across all sectors. Now, there may be we are in a dynamic economy in the sense of there have been shifts, especially over the past couple of years, that is very stressful for workers, for the managers of workers, and for leadership, the firms, to deal with all of that dynamism. I don't think it's ever been more challenging to go out there and be in the workforce and deal with all of the changes going on. So I think that's true, and I think that causes a lot of stress. But there is opportunity, and there are some of the things that hold back that that sorting into those jobs that people want, right? Is that some people don't want to, they don't want to move, right? I mean, like the labor mobility part of it is still a real thing. So those jobs, if you want to work in clean energy, the jobs are there. They're all over. You may have to move from Pittsburgh to somewhere else to go do it, and one of the phenomena that we've seen in America is the decline in the interest of labor mobility over the years. And of course, that is a decline that also shows up with immigrant populations. So, I mean, immigrant populations remain movers. They don't feel attached. They're happy to go and take on a new sports team to root for and lay down new roots somewhere else if there's a job that's going to pay them well and they're going to climb the economic ladder. And there are a lot of native born Americans who increasingly are reticent to make that move. And I think that is a problem. And that means that they're making a choice of where they're going to try to derive their happiness, and less so from the workplace. But there's no question there are jobs out. Jobs are aplenty. They're there for people who want them, which should make for a very happy Labor Day if you want to go out and find that job.
Absolutely.
Is there anything people should be happier about than Labor Day? I mean, I can tell you, Labor Days should be really, really great if you do have a job. I can't imagine something worse than celebrating something called Labor Day when you don't have a job and you really want one. So and we've seen that before. So for all of the challenges in the economy with dynamism, inflation, shifting from services to goods, and all the things, technology, the application of technology into so many sectors. The jobs market has been one of the really great bright spots, and that's certainly something to celebrate on a Labor Day weekend. Guys, thanks for a great show. It's good to do the jobs of Palooza, payroll of Palooza. Yeah, I think payroll of Palooza is my favorite. Yeah. Have a great long weekend. We'll catch you next week on the Macrocast.
Great. You too.
Thank you for listening to the Macrocast. Please remember to subscribe, rate, and share.